We are back again with departmental accounts. So we just learned the basics of departmental accounts in the last class. We worked out two questions. I hope you remember the names of the questions as well. Okay, because so that you can relate each and every question in a pretty good manner. All right. So we'll just briefly glance through what we have learned in the previous class, and then we'll proceed with the rest of the questions. Okay. So firstly, we learned what is the chapter overview. It's like we learned the advantages of departmental accounting, how can we maintain, what are the different methods to maintain departmental accounts, and things of that kind. Okay, and the basis of allocation of common expenses was all learned in the last class. So just briefly revising the taking a glance of what we have learned yesterday. So the chapter overview, and then we learned the introduction, as in why is the system of departmental accounts maintained just one person sitting and writing each and the accounts of each and every department. It would be better we allocate the work to different people. Okay, so that was in the introduction part, and the advantages, it was to check efficiency, to which one do we have to put in more capital outflow and things of that kind. We learned the advantages. Now, what were the methods of departmental accounting? It was like the all accounts, all the books can be maintained in a one single, all the accounts to be maintained in one single book, or all the accounts to be maintained in different books. Okay. And then the basis of allocation, which was very important, and it was actually from this we said that these points are very important. Basis of allocation, we said that there can be two different types of expenses. One is the independent expenses, which is only purposefully only to the specific department. So we don't actually have to allocate that expense. Instead, you just can charge that expense to that single department. And if it is in the case of common expenses, like we dealt the case of a rent, okay, if that is the case, then you will have to allocate these rent expenses on some suitable proportions. And that is what we learned, like for rent, it is floor area, for wages, it is number of employees and things of that kind. Okay, so this is just a basic or summary of like how do we allocate different expenses on the on what a portion. Okay, and then we learned the different types of departments. One was dependent department and the other one was independent department. Dependent departments, they have continuous transfers on and off, whereas in the case of independent departments, it is not actually possible. Okay, so they want, because they are a self-sufficient unit, they don't actually want to depend on the other, just like the name suggests. Okay, and then we learned about the interdepartmental transfers. How do we transfer from one department to the other one? How do they transfer goods? One was at cost, or it can be at cost plus a profit margin, or it can be at a market price. Okay, so we learned the three methods by which one department can transfer the goods to another department. And then how do we eliminate unrealized profit? This was the very important point which we learned, how to remove the unrealized stock reserve. And as I said in the previous class, the stock reserve is only in the case of closing stock. Okay. See, if Department A sends goods to Department B and Department B could actually sell it to the final customers, then there is no concept of stock reserve. Instead, when Department B was not able to sell out these goods, then these goods will be there in the go down, and hence you will have to compute unrealized stock reserve, because Department A has transferred goods to B, whereas department, when we combine both accounts together, the effectively the company has not maintained any profit. So the profit which was recognized in department A when it was transferred to department B, you will have to eliminate that. Okay, and then we learn the formula for computing the unrealized profit. What was the transfer price? To that you apply the percentage at which the department A has transferred. Okay, and then we learned the journal entry. We learned the journal entry for the current year and for the next year. For the current year, as we rightly said, it was a stock reserve, unrealized profit. In order to remove that, you will have to reverse that out. Okay, or rather, you will have to reduce the profit element. If you have to reduce the profit element, you will definitely have to debit the profit and loss account. So the journal entry was P&L account dated to stock reserve in the current year, and for the next year, it was like you just have to reverse this entry, because in the current year, we had to reverse it. We had to debit the P&L just because. Why did we do that? We had to reverse the P&L account because it was not realized during the current year. In the next year, we don't actually know if it will be received or not, right? So in the next year, you will have to reverse, and if the sale is made, you will have to recognize the profit. And one more point to be noted was like in the current year, okay, the stock reserve amount, it should also be reduced from the current assets. Okay, the stock reserve amount has to be reduced from the current assets. Which concept do we follow there? We have the conservatism principle or the prudence principle. We always value the stock at cost or NRV, whichever is lower, because we are not allowed to anticipate profits. We only anticipate the losses, and henceforth this profit recognized should be reduced from the current assets. Okay, so that was the disclosure and balance sheet. And with that, we learned one question relating to Surya Private Limited, wherein we computed the stock reserve. It was asked to compute the stock reserve, and we computed the stock reserve. Okay, and I hope you remember that we computed the value as 9,000. Okay, and for the next one, it was like the which was the next question. It was Dilwale Private Limited. Okay, and in Dilwale Private Limited, we were like, we had to compute the profit margin, and then based on that, you had to prepare the departmental trading account. So as we know, in the departmental trading account, we just have, it is just like the normal trading account. We just have one amount column in the normal trading account, but when it comes to departmental trading account, as many number of departments you have, you will have as many columns. Okay, that was the only task, and we did that. We had the working notes and things of that kind. Okay, so now I guess we can straight away move on to the next question. Okay, and okay, it was Gajni Private Limited. Okay, so listen everyone, from now on we are moving further. Okay, to the next question. Be alert, be attentive. I guess everyone is okay with this. Okay, like the revision part, anyone is everyone okay with it? And by the way, just also make ensure that the audio and videos are clear. Is the screen presenting fine? Please do message. Is the audio, video, and the screen presenting everything fair? Please keep on messaging, students, and afterwards we'll continue with the next question. Okay, everyone. Okay, keep texting everyone. Do message. Okay, everyone, all done. And by the way, I did go through your notebooks as well. You would have received the messages. Okay, everyone has maintained it pretty well, except for a few which I had specifically mentioned in the group. But then, good effort, students. I'm very much impressed by the way you maintain it. Okay, yes. So Donna, Varun, everyone in track, I guess. Joel, Shankar, yes. Thomas, Alina. Okay, yes. Good, guy. So over to the next question. All right, we'll see to the next question. Gajni Private Limited as the next question. Let's see to that. Okay, so listen, I'm just reading out the question and then we'll see how to sort it out. Okay, it is more or less similar to what we have learned before. Okay, so listen, I'll just read out the question and then we'll proceed on. Okay, so Gajni Private Limited has three departments and submits the following information for the year ending on 31st March 2001. Okay, so the period date. Okay, so the period date is given as 31st March 2001 as the period date. All right, okay, so 31st March 2001. You're given the purchases units. See, purchases 5,000, 10,000, 15,000. The number of units are given. And the total purchase amount is also given as 8,40,000. Sales units are also given as 5,200, 9,800, and 15,300. The selling price per unit is given as 40, 45, and 50. And the closing stock is given as 400, 600, and 700 units. So what are we asked to prepare? We are asked to prepare the departmental trading account. Okay, we have seen the similar question in the previous one. So I'll do, see, I have slightly changed the way in which I present it. I give an answer outline in the first case. Okay, so that you will be able to draw the outline of the answer. And then we proceed with the working notes, because as I was checking your notes yesterday, everyone had written the working note 1 basic data first, and then you wrote the answer, and then the working notes continuation. So let's change it, change the method in which we does that. We need to have the outline first, okay, which is the answer to the question, and then we'll be proceeding with the working notes. Okay, so these are the data given. So I'll just give you the answer outline how it should be like. See, as I said, it is departmental trading account, right? So how, what actually do we have to do? We just have the particulars column, and we have the amount columns for the different departments. Okay, so here we go. We have particulars, and we have three departments here, A, B, and C. So, and the other side also, we have these three columns. All right, so take your pen, pencil, everyone, scale, and draw the columns. And once you're done with the outline, just give me a message. Okay, you're asked to prepare the departmental trading account, so just the outlines will do. Maybe you can leave about half to three-fourths of a page. Okay, so once you're done, give me a text, give me a message, everyone. And I had specifically said many of you, like few of you, have to use your scales specifically. Everyone, today's notes, I'll again be checking today's notes. So I want everyone to use your scale and pencil, nothing more, nothing less. Okay, so use that. Okay, Harshada, Shruti, fine. Okay, all right. Others, use your scale, pencil. Anandu, yes, good. Everyone, take your scale, pencil, keep on drawing. Yes, Varun, good. Thomas, Ria, Preena, yes, yes, good, good. Saurav, Donna, yes. Go ahead, go ahead. Others, yes, Joel. I guess, and everyone, bargain, yes, bargain, good. Okay, all done. Okay, fine. So we have the chapter outline here, and now let's move on to the basic data. So as we saw, it's like most of the figures are given in the table. So we don't have much things to write in the basic data. So what do we write? We write the company name and the number of departments, yes or no? Okay, so working notes. Working note number 1, we have the basic data. Name of the company is Gachini Private Limited. So remember the question with the name Gachini Private Limited. Okay, and the number of departments is 3. So complete this, everyone, because all other figures are given in your table. So you don't actually have to repeat that in the answer. Just these two wordings will be fair enough. And once you're done with this, keep messaging. Okay, everyone. All right. Yes. Take your pen and keep writing. Make it fast. Just 2 or 3 sentences, guys. Make it very fast. Okay. Yes. Keep going. Okay, Harshita, good. Yes, Shruti. Yes, Devika, Anantu, Joel, Saurav, Varun, Ria. Yes, good. Bagan, Preena. Okay, fine. I guess everyone has almost written the basic data. Now let's move on to the next working note. Okay, it's actually not a working note. Okay, it's an like how do we compute it? Which all figures are given, and what are the different items which we need to compute? Okay, so let's see. I don't want you to take this down. Okay, no, I'm just checking out the figures from the question, and then just listening or rather pulling out which are the figures we just have to compute. Okay, so which is the draft final answer. So I don't want you to take this down. Okay, so departmental trading account, we have the particulars, and we have the different departments coming in. Okay, department A, B, and C. Okay, we have another particulars, the credit side of it, and 3 columns A, B, and C. Okay, so over to the next, to the opening stock we have. See, the opening stock is not given. We'll have to compute for all the 3 departments. The opening stock is not given, so you will have to compute that. So I have written it as question mark. Okay, and the sales figure. See, both the unit and the rate is also given. So both are available for us, right away available. So not to worry on that. So what, and for all the three departments, the quantity and rate per unit is given. Okay, fine. And then we have the purchases coming in picture. So purchases, listen, we are provided with the quantity, but we don't have the rate. Okay, we are given the quantity for all the three departments, but the rate is not given. Okay, so for all the three departments, we have written that only question mark is the rate. Okay, and then for the closing stock, let's see what are the figures which are given. Even for closing stock, as you see, the quantity is given, but the rate is not given. Okay, so you just have to compute the rate. All right, and then GP. See, if these figures are not given, many of the figures are missing actually. So definitely for gross profit, we'll only have a question mark. Okay, so all right, so for all the three departments, it's a question mark, and totals again a question mark. All right, so these are the figures which we actually have to compute. All right, so which are the figures we have to compute? We'll have to compute the opening stock is not given, so you will have to compute the opening stock. The purchases rate per unit is not given for all the three departments, you will have to compute it. The closing stock rate is not given, and yes, once you get all of the figures, you will get GP as a balancing figure. Okay, so this is just the draft answer, so that we just have to be clear on what are we going to compute next. Okay, so next let's compute, just as we saw in the previous question, we'll have to compute the profit margin. And the profit margin, we'll have an assumption for that. We assume that all the goods which are purchased during the year, we have sold it during the year. Okay, so for profit margin, listen, we have the see, and I noted in many of your answers in your notes that in the working notes you missed to write the reference column. Very important, students. I want that also be in the to be in the answer. Okay, because it is only from the reference column that you get to know if it was taken from the question or you worked it out. Okay, so I want that as well. So particulars, reference, and we have one amount column also. So for department A, 5,000 units is what they have purchased, and let's say the cost is 40 per unit. So that both the figures are given in question. So we have 2 lakh, and for department B, it is 10,045. Okay, so all that is given in the question, 4,50,000. Same for department C, it is given, so it is 7,50,000. So total selling price. So what is the total selling price for all the three units and for all the three departments? Okay, so we have it over here. It is 14 lakh. And so what have we have purchased? The total purchase cost of all these three units are given to you. So the total purchase value is straight away given. Okay, and what is the purchase value? It is 8,40,000. And hence, what is the gross profit? You get the gross profit as 5,60,000. 14 lakh minus 8,40,000, you get 5,60,000 as the gross profit. Okay, so what is the next step? You will have to compute the GP percentage, right? So the profit margin or the GP percentage is nothing but GP divided by sales into 100, you get the GP percentage. Okay, so GP percentage divided by sales into 100, you get the GP percentage as 40 percentage. All right, students, so this is the working note number 2. Working note number 1 was basic data, and now we have working number 2. So everyone keep writing this, complete this, use your scale, pencil. I want the columns intact, and then give me a thumbs up. Okay, once you're done. Yes, students, make it fast. Okay, yes, very simple actually, just 3 columns already worked out. Make it very fast. Yes. Okay, Shruti, good. Okay, Harshada. And by the way, use your calculators as well, students. I want the calculator speed also to increase. Okay, being the online class, no relaxation on that. I want you to use the calculators and come up with the answers. Okay. All right, Bagan. Yes, good. Harshita. Yes, George. Okay, Varun, good. Anandu? Yes, Saurav. Ria? Yes, Joel, good. Yes, Donna? Tina? Okay, good going, students. David, good. Keep writing, keep writing. Use calculators and get the answers. Okay. By the way, I did not see Thomas today. Okay, others keep responding. Hat, good. Okay. We get Madhura. I did not get you. Sandra. The I guess. And Sandra. Make it fast. Oh, it's not clear. It's breaking. Okay. Is it now still breaking? Okay. We'll see to that. In the meantime, everyone complete. Okay. The purchase units, number of units purchased, you get the total purchases. Keep trying, students. Yes, very simple actually. Okay, keep doing. And once you're done, give me a message. Very simple, simple task. Yes. Okay, Shruti, done. Varun. Okay, keep on doing. Others, use your scale, pencil, pen, and keep on writing. And also use your calculators. Please just don't copy it from the screen as such. Take your efforts, take your time, and then work it out. Okay, everyone. Many more to give me a thumbs up, I guess. Almost done. Okay, okay, fine. Everyone, okay, Anandu, good. I guess everyone is fine with that. Okay. Okay, Bhagan. Anyone yet to complete this? Please give me a message. If anyone is yet to complete, please give me a message. Or else I'll proceed with the next working note. Shall I? Okay. So listen. Now next we are going to compute the opening stock in units. As we discussed in the previous class, see the sales units is given, the closing stock units is given, the purchase units is given. We have learned from plus 2 that opening plus purchases minus closing, you get the sales. You just have to rearrange the formula, you get the opening stock. Yes or no? Okay, so it is a statement to compute the opening stock. We have the particulars column, we have the reference, and we have it for all the three departments, Department A, B, and C. So the sales units, it is straight away given in the question. 5,200 for A, for B it is 9,800, and for C it is 15,300. And we just have to add closing, because opening plus purchases minus closing, you get the sales. So to sales, you have to add the closing stock. Okay, and the closing stock units are also given in the question as for Department A it is 400, for Department B it is 600, and for Department C it is 700. And to that, what we have to do? You will have to reduce the purchases. That is also very much given in the question. So you have that 5,000 reduced for Department A, for Department B it is 10,000, and for Department C it is 15,000. Okay. So just do the calculation, you get the opening stock, right? Okay. So here are the answers. Do compute it, everyone. Yes. Make it fast, and once you're done, give me a message. Okay. Everyone. Okay, make it fast, students. Make it fast. Very simple task. Yes, Harshida, good. Okay, others also. Make it fast. We are going to track this very soon. The answer. We are at working note number 4. We just have one more working note to compute the value of opening stock and closing stock. Yes. Yes, Anandu, good. Yes, Joel. Okay. Everyone. Yes, Ria. Madhura. I don't usually get a message from thumbs up from Madhura. Okay, Saurabh. Donna. Okay, Madhura. Yes, finally. Good. Okay. So listen. So working note 4 is also done. Now let's move to the next working note. We just have to compute the value of opening stock and value of closing stock. Let's see how we go. Okay. So here we have the particulars, the reference column, and for all the three departments, Department A, Department B, and Department C. Okay. So here we go. We have the opening stock units, which we computed just before. So you will be giving in the reference column as working note number 4. Okay. And then like the figures are 600, 400, and 1,000. And the cost per unit is from working note number 3, 24, 27, and 30. Okay, you multiply, you get the value. Cost of opening stock, you get it. You just have to do the multiplication for that. Okay, 14,400, 10,800, and 30,000 for Department C. Similar process to be done for closing stock also. The units are given. Okay, so given. All right. And what are the figures? It is 400, 600, and we have 700. And the cost is just the same as before, 24, 27, and 30. And you get the the final value of closing stock. So use your calculators, come up with the answers, everyone. Yes. Make it fast. And listen, here in the opening stock, it is actually not given. You have to give the working note reference as 4. Okay, give the working note reference as 4. It is not given. Just in the previous working note, we computed. So you will have to give the working note reference number. And once you're done, give me the answer for that. Everyone? Yes. Very simple, right? Once you're done. Okay, 9,600, 16,200, 21,000. Yes, Shruti, good.
Yes, Varun. Check for the figures as well. Okay, the final answer figures. Now that we have all the content required for the final answer, you just have to paste it from different working notes and put it in the answer. That is the only task remaining. Okay. So once you are done with this, you all will be starting with the final answer. Okay, you have already drawn the outline, answer outline before. You just have to pick up the figures and post in the final answer. Okay, keep on doing that, everyone. Okay, everyone do that. The final answer coming up, and once you're done, okay, once you get the final GP, I want you to come up with the GP figures, okay? Because all other figures have computed. It was very much available. So you come up with the answers for gross profit. All right? Make it fast. Yes. You are going to crack this up. Okay. Make it fast. Use your calculators and come up with the answers. Okay. Okay, Shruti, 83, 200, 1,76, 400, 3,06,000. Yes, let's see if that's the answer. Let all others also come up with the answer. Maybe right, maybe wrong. Okay, students? So come up with your own answers. Let's see for that. Let's wait and see if those are the answers. I want everyone to come up with your own answers. Okay. Shruti might be wrong. Who knows? Okay. Everyone. Yes, yes. Okay, even Harshita got the same answer. She seconded. Okay, even Varun got the same answer. Yes. Others? Okay, Thomas, same. See, once all other figures are given, it's very easy for you to use your calculators and come up with the answer, right? Yes, Devika, good. Preena? Yes, Sandra? Bhagan? Anandu? Everyone has come up with the answers. Let me just check. Okay, mostly all. Yes, Joel, the same answer? Okay. Yes, Saurav? Okay, so let's see if those were the answers. Okay, so gross profit was 83,200, good, and 1,76,400 and 3,06,000. Yes, and you just have to give the total columns as well. Okay, all right. So you are up with the final answers. Good going, students. Good. Anyways, okay, all done. Okay, so now I guess you can take up
With Pandeyji Private Limited is the question. Okay, so I'll just read through the question and let's see how it goes. Okay, so Pandeyji Private Limited has three departments. Department P sells goods to Department S. Okay, so Department P to S at a profit of 25% on cost, and to Department Q at a profit of 15% on cost. Okay, so Department P is sending goods to Department S and Department Q. Let's see how to sort this out. Now, Department S, they are again selling goods to Department P and Department Q at a profit of 20% and 30% on sales. Department Q is selling goods to P and S at 20% and 10% on cost. Okay. And departmental managers, they are entitled to a 10% commission on net profits to unrealized profit on departmental sales being eliminated. Okay. So what are we asked to compute? Let's see. Again, we have a big chart coming up. Departmental profits after charging managers commission, but before the adjustment of unrealized profit. These are the different profit elements given. Okay, we have the profits of different departments in picture, and the stock lying is also given. So we are asked to compute the departmental profits after managers commission. So let's see. So listen, students, I'll just brief the question and then we'll move on to the next. Okay. See, so our intention is to compute the departmental profits. We have to compute the correct departmental profits. So what happens? See, aren't the profits already given? Yes, for department B it is given as 90,000, for department S it is 60,000, and for department Q the answer is given as 45,000. But what happened is, even in this, the manager's commission, they are entitled to a commission of 10%. That is reduced, but each department has forgotten to compute an amount of unrealized profit. Okay, listen here. Department P has sold goods to Q and S. Okay, so now you tell me, when department P transfers goods to department Q and S, which department will be having the unrealized profit? Message everyone. When department P is transferring goods to department Q and S, which department will have the unrealized profit? Okay, everyone, I want everyone to answer. Yes, yes. Okay, department, yes, Thomas, department P, Devika has said department P, yes, George, Bagan, Anandu, Ria, yes, yes, good, fine. So, as you all said, department P will be having the unrealized profit amount, okay? So, when department P is transferring goods to department Q and department S, P will have the unrealized profit amount, okay? So, now, this unrealized profit will be on the closing stock of department Q and S, right? P has sold goods to department Q, okay? And Q stock, the unsold stock, you will be having the unrealized profit amount. So what happened was, when they computed this profits of 90,000, 60,000, and 45,000, they eliminated, or they did not actually consider, the unrealized profit amount, okay? Is the point clear? When they computed the profits, what happened was, they did not take into account the unrealized profit amount. So we'll have to actually compute the unrealized profit, and then you will have to compute, or rather rework, the manager's commission. So I'll just give a brief of it. See, if the, for all the three departments, okay, they'll be having a profit now, and from this profit you have to reduce the unrealized stock reserve, and then you will have to reduce the manager's commission, so that you get the correct profit. Okay, so this is how you should work it. You have the profit, and from this profit you have to reduce the manager's commission, so that you get the correct profit. Okay, so this is how you should work it. You have the profit, and from this profit you have to reduce the manager's commission, so that you get the correct profit. Okay, the manager's commission before considering the unrealized profit. So you will have to rework and then compute it. Okay. So this is the brief of the question. Okay. So this is exactly the brief of the question. And let's see the answer outline, so that you can use your scale pencil and draw the answer outline. See, we just have to compute the correct departmental profits. So how will it be? We have the particulars column, we'll have the reference column, and we'll have it for department, the three departments P, Q, and S, and that is it. We just have 3 plus 2, 5 columns. Okay. So yes, here we go. Just take the outline of it, students. Yes, this is the outline. We just have to fill in figures over here. Okay. Once you're done with the outline, give me a message. I'll do with the rest. Okay. Can't hear, not audible. Okay. All right. Uh, okay, I'll just sort it out. Now it's okay? Everyone, now it's okay? Now it's fine, fine. Good, good, good. So keep writing. Do the outline. Draw the outline. No, there are some connectivity issues, students, network issue. That is the reason why audio is going on and off. Okay, please bear with that. All right. So keep on writing the outline. Okay, once you're done with the outlines, is any points not clear for anyone? If yes, I'll explain that again. Okay. Is any point missed out? That you didn't get it? Okay. Like was any point missed out? Like maybe a matter of 1 minute, I guess. You wouldn't have yeah. Anyways, we'll sort it out. Not an issue. Just have the answer outline ready now. After which we'll sort it out. Don't worry. Not an issue. Not a big deal. Okay. Yes. And once you're done with the answer outline, the main answer. Okay. Main answer. We'll proceed. Give me a thumbs up, students. Just the scale and pencil task. Why taking this long? It's been 2 minutes. Yes. 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 It's okay even if you don't write the particulars column. We'll come up with that later. Okay. I just want you to have the final outline just to set the picture, rather the diagram, the outline set. Just that is the only intention here. I just need 5 columns. Okay. And maybe half a page task. Yes, Varun. Yes, Shruti. Ria, Preena, Thomas. Yes, Devika. Bagan. Yes, Anandu. Yes, Joel. Good. Good, good, good going. Yes, George. All done. I guess. Yes, Donna. Yes, fine. Okay, so we'll proceed with the rest. So you have the outline. Now we start with the working notes. Okay, so we have working note number one. Let's see what is the working note number one. See, department P, they are selling department because this was given in the content, right? It was not a table, so it is better to have this working notes. So department P, they sell goods to department S at a profit of 25% on cost. These two figures are required, 25%, and that is computed on cost. Department P took you at 15% on cost. Okay, now let's see the rest. Department S is transferring goods to department P at 20% on sales and STQ at 30% on sales. Okay, fine. So just take down this working note, students. Working note number one. One more is there. Let you complete this, and afterwards I'll give the rest. Okay, one more working note. Basic data is required about the department Q transferring to P and S. Okay. Yes. And once you're done with this, give me a message. Drop in messages. Everyone. Yes, yes. Very simple task. Make it fast. Make it fast, students. All done. Need to complete. Okay. Okay, okay. Make it fast, students. Just to do the 2 diagrams, nothing more. Keep your notes neat. As in the previous class, right after the class, maybe in 5 minutes, you'll be sending the notes across. So I want the notes also to be neat. You're doing it. Okay, Devika, done. Varun, good. All right. Shruti, good. Yes, yes. Yes, Thomas, good. Ria, Anandu. Yes, yes. Make it fast. Yes, Bagan, good. Okay, all done. I guess everyone fine, fair enough. So the next one, we have one more to be done. That chart presentation is required for one more, which is Department Q sending across goods to Department P and S. One is at 20% on cost, and the other one is at 10% on cost. Okay, so take this down also, and once you're done, give me a message. Yes, make it fast. Okay, yes, you're doing good. Yes, Harshita. Once you're done with these working notes, we'll proceed with the rest. Okay. Yes. Good. Good. Good going. Yes, Shruti. Okay, Bagan. Keep on doing. Keep on doing. Have the energy. Just few working notes here. Just to draw the charts, 2, 3 columns you have, right? Make it fast. Yes, Surya. All others done. Madhura, I miss you at times. Yes, George. Joel. Saurav. Okay, done. Fine. Madhura, good. All right. Okay. So we have the working notes and picture. The for working note one, which was basic data, that is done. That is sorted out. Okay. And we have one more point, which is departmental managers, because that is also given as not as a table, right? It is given in the content as a paragraph. So it is better to take that as well. Departmental managers, they are entitled to a commission of 10 percentage on the net profit, which is subject to unrealized profit. Meaning, what is the profit now? You will have to reduce the unrealized profit. And what is the net profit that you get? On that, you will be computing the 10 percentage. Okay, that is it. All right. So just take this down as well. Departmental managers entitled to 10 percentage commission on net profits. Keep a note of this, and then we'll proceed to the answer. Okay. All right, students, listen. Now, the draft answer, I don't want you to take this down. Okay, not required to take this down. Let's see how it goes. All right, see, we are going to compute the departmental profits. Let's see what all figures do we have, and let's work out on the missing figures. Okay. So as I said, I don't want you to take this up because this is just for your information, like how to compute it. Okay. So we have particulars column, we have the reference column, and we have 3 columns for all the 3 departments. Okay. So how much is the profit which is given to us? Okay. After charging manager's commission, which is already given. Okay, it is 90,000, 60,000, and 45,000. So for all the 3 departments, Department P it is 90,000, Department S it is 60,000, and Department Q it is 45,000. Okay, and then listen, what happened was this profit of 90,000, 60,000, and 45,000 is before unrealized profit. Okay, these 3 figures are before unrealized profit, but after manager's commission. But as we just discussed, only after reducing the unrealized profit you can compute the manager's commission. Okay. So now what you will have to do, you will just have to reward the manager's commission, which is already given effective. Okay. So the manager's commission amount will have to reward work, which is 1/9. It is nothing but see, listen, we had a profit before. Let's say it was X. From this, you reduce 10% as manager's commission. Okay. So you got this profit of 90,000, right? I'm just taking Department P's case. How was it 1/9? So in order to compute the profit, okay, or rather the manager's commission, what we have to do? What is the profit? Which is 90,000 and into 1/9. You just have to sort this out. As in x minus 10/100, x is equal to the profit of 90,000. So here we go, we have 90x by 100 as 90,000. So we get x as 90,000 into 100 by 90. If anyone was not clear with how 1/9, here is the answer for that. 90,000 into 100 by 90, because we had the profit. From that, they reduce the manager's commission and then they go the profit of 90,000. You just have to reverse work, do the reverse calculation so that you get the manager's commission. Okay. So we have it as 90,000, 6,667, and 5,000. Okay. All right. And the unrealized. So from that profit, 90,000 plus 10,000, and it is from that profit you have to reduce the unrealized profit amount, which is not given in question straight. You will definitely have to compute it. Let's see how do we compute it. Okay. All right. And then after that, after getting such profit, you will have to compute the profit before manager's commission. Okay. And it is on this profit that you apply 10% as manager's commission. Okay. So this is it. This is what we have to do actually. So So, and once you reduce the manager's commission, you get the correct profit. All right. So listen, students, it is just this. Okay, we are given the profit. From that profit, you have to add back the manager's commission so that you get the profit before manager's commission. From that, you reduce the unrealized profit. After you reduce the unrealized profit, we get the correct profit before manager's commission. You have to 10% manager's commission, reduce it so that you get the correct profit after manager's commission. Okay, so this is a task, and our intention or our requirement is only to compute the unrealized stock. Once you get the unrealized stock, others are very simple. Okay, so do one thing in the final answer. I just want you to write down the first two sentences. Okay, first two lines, and then we'll proceed with that. Okay, all right, just keep on writing it, students. Just the figures, just to post in the figures. Just to post in the figures, 90,000, 60,000, 45,000, and the manager's commission part. Okay, nothing more. Very easy, very easy. We'll see how to compute the unrealized profit. Okay, the unrealized profit portion is very simple. We'll see to that. Okay, just. All right. Yes, Madhura, Ria, good. Okay. Shruti, Devika. Yes, Prerna, just to post in the figures. Everyone. Yes, hurry up. Varun, yes, good. Yes, 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 yes. Bhagan, good. Joel. Okay. So let's proceed with. Now we shall compute the unrealized profit. Okay, so that is the next part. How to compute the unrealized profit. Let's see. Here we go. To compute the unrealized profit, again we have 3 plus 2, 5 columns. We have the particulars, reference, and 3 department columns. Okay, particulars, reference column, okay, department P, S, and Q, and the total. See, I have missed out the reference column. You can write down the reference column in the comment section. Okay, so that is the
Excuse me, ma'am. Ma'am, we can't hear you.
Is the screen clear now? And Department P has sold goods to Department S. Okay, Department P has sold goods to Department S at 25 percentage on cost. All right, Department P has sold goods to Department S at 25 percentage on cost. Since it is cost on this amount of 18,000, you will have to apply tax 25 by 125 because it is on cost. Or rather, you are just converting the profit percentage from cost to sales. That is what we are doing over here. Okay. Similarly, for Department Q, you will have to work it out. So it will be 15 by 115 and the total into the stock line in Department Q. Okay. So that 3,600 plus 1826, you get the total unrealized profit of Department P. Okay, Department P, you will be able to compute the profit. How will you be able to compute the unrealized profit? It will be regarding the closing stock in Department Q and S. So Department Q, you will have to apply the profit percentage at which Department P sold the goods to Department Q, and for Department S, you will have to apply the profit percentage at which P sold it to S. Okay, and so since the profit percentage given in the question is with respect to cost, you will have to take it as the rate divided by 100 plus. Okay, rate divided by 100 plus rate. That is how you will have to compute it. Okay, now do one thing. I have just given one. All right, I have just computed the profit for unrealized profit of Department T. I want you to compute the unrealized profit of Department Q and Department S, and let's see how you come up with the answers. Keep writing the students. Yes. Keep writing this. And once you're done, please message. Once you're done with this, keep messaging. Keep working on that and compute the unrealized profit for all the three departments. You want it for department P, Q, and S. We want the profits for department P, Q, and S. Make it fast, students. Okay, give me the answers as well, not just done. I want the answers. Okay, okay, Harshita, I'll explain 1 by 9. Not an issue. We'll see. Others, let me see if you can come up with the answers for the others. Harshita, I shall explain. Okay, just give me the answers of this. 21,272. Okay, 5426, 21,2727. Let's see if those are the answers. Okay, we'll wait for the presentation to come up. Okay, all right. So I'll just put on the answers for department S. It is okay. Here we go. We are near to the answer. It is 21,000. Clap for yours. Clap yourself. Okay, and department Q. It is. Let's see. All right. So you have come up with the correct answers. Okay. For department P, it is 5,426, and for S, it is 21,000, and for Q, it is 2,727. Okay. So these are profit amounts. So now, Harshita, listen. See, you wanted a clarity on 1 by 9, right? Listen here, Harshita. This was the profit we had. Okay, let's take it as X. And from this X, they forgot to reduce the unrealized profit. Okay, so this should have been the step. Unrealized profit you should have actually reduced. And on this profit, you should have computed the 10% commission. Okay, this is what actually we have to do. But they missed out this one. So what has to be done? From the profit, they reduced straight 10%. Okay. On this X, they straight away reduced 10%. So I'm just taking the case of department P. Okay. So from the profit, they reduced the commission amount, and they got the amount as 90,000. Okay. Is the mic off? Okay. All right. Uh, See, X minus 10% of X, you got it as 90,000, because this was the actual profit, okay? And from that, they reduced, or they did not they missed out to reduce the unrealized profit. Instead, on this X, they computed 10%, okay? So X, 10% of X as 90,000. That was the actual profit given. So now you just have to sort this out. You just have to sort the equation. So X minus 10 by 100
between why 1 by 9. I'll explain that again. Listen. See, we have a profit of, our profit is X. Okay. From that, you reduce 10% of X, which is the commission, you get 90,000. So on solving this, 90,000 into 100 by 90, if you take this much, okay, 90,000 into 100 by 90, on just merely solving that out, if you solve this out, you get the profit amount. Okay, if you solve this out, you get the profit amount. And to this, if you apply the 10%, okay, to this, if you apply 10%, you get the commission. Okay, so 100 cancel. So 90,000 into 10 by 90 or nothing but 1 by 9. This is how the amount of or the ratio of 1 by 9 is obtained. Is that clear, Harshita? Give me a message. If not, I'll explain that again. Is that 1 by 9 clear, Harshita? Okay, good. So every others is has everyone completed this much? Like I guess yes, right? You all had actually given me the answers as well. Now what is the big deal? See, you have got the unrealized profit also in picture. Once you get the unrealized profit, put that in the outline, and then you reduce, like from the given profit, reduce the unrealized profit so that you get the profit before commission. On that you will be applying 10% so that you get manager's commission. Reduce manager's commission, you will get the corrected profit. Yes. Come up, students, come up with the answers. Make it fast. Yes. Give me the final answers. I don't want you to check into the screen. No. You will be able to do it yourself. I'm just giving the outline of it. I'm not writing the answers. I want you to come up with the answers. Let's see if it works. Okay. Come up with the answers, students. Okay. Riya, Shruti, Preena, they have all come up with the answers. Yes. Let's see if that is right or not. Let's wait others for also to complete the answers. Okay, everyone posting the answers. Yes, Harshida, you can even do that. You can straight away do it as 100 by 90 so that you get the profit amount straight. But in the final answer, you have to ensure that you write the amount as well. That is okay. In the working note, it is fair enough. You can write straight away, write it as 100 by 90. Even if you miss out the amount of manager's commission, it is fair enough, not an issue. You can do that. It is just a presentation matter. You just miss out one sentence. That's it, not an issue. Okay, yes. All others come up with the answers. Yes, let's see if this works out. Okay, yes, good. Let's see. Give me some of the other answers. That's it. Anandu, yes. Saurav, yes. Even Joel got the same. Okay, Bagan. Hope everyone is computing it there. Okay. Glad to know that anyways. So let's check for the answers. Okay, we have the profit. We added manager's commission. And then you reduce the unrealized profit, which was computed in working note 2. Give the reference columns also, students. Okay, please don't miss out on the reference columns this time. I'll be checking your notes. Okay, so unrealized profit you reduce. So you get your profit before manager's commission. And from that, you reduce manager's commission. And you get the final answer as 85,117, 41,100, and 42,546. Yes, good. Everyone has come up with the correct answers. Good going, students. Yes, make it fast. Everyone. Others who have not yet completed, please take this down. How many more to complete actually? Devika is yet to complete, I guess. No worries. Take it. Devika, you have already come up with the answer. Good. Who else? Everyone? Anyone yet to complete? Yes, Josh. Good. What about Thomas? I don't see his messages today. Okay. Yes, Thomas. Good. Okay. So that is it. So we are done with the next question also. Okay. I guess we've completed about 3 or 4 questions, right, from this chapter. Many more to go. We have a total of 9 questions to complete actually. So 4 down, 5 more. Okay. So let's go to the next question. Bajrao Private Limited. Okay. Listen. So this is again somewhat similar to the previous question that we have dealt. Okay, almost the same, just that there will be figure changes here and there, just that to be kept in mind. Anyways, not an issue. I'll just keep reading the question and we'll see to that. See, has 3 departments. X sells goods to Y and is it okay? X sell goods to Y and Y at 25% on cost, and department is at 20% profit on cost. Okay. Department Y sells goods to department X and Z at 15% and 20% on sales. So if it is sales, you can straight away apply it as 15 by 100, 20 by 100 on the stock amount. If it is cost, you will have to do it as the rate divided by 100 plus rate. Okay. I hope that logic is clear for everyone. We are just converting the cost rate to sales rate. Okay. Because the figures given are in the sales proportion. Okay. Now, department is it charges 20% and 25% on cost to X and Y. All right. And we are also given the manager's commission. They are entitled to 10% commission. Okay. So here is the other details, like the profit figures are given 36, 27 and 18,000 profit figures. By the way, this is your practical question. Okay, this question is there in your practical question. I forgot to say that out. Okay, this is there in your practical question, and practical question 2 deals with it. Page number 12.28, you get this question. Okay, students. Okay. So the profit for all the 3 departments are given, and the transfers. What are the stock lying? Okay, the stock lying at different departments from P to Y, P to Z. Okay, it's actually not P, it is X, and here it is Y, and here it is Z. Okay, X to Y and Z, Y to X and Z, and Z to X and Y. Okay, so the stock lying in different departments are given to us. We just have to do the same process. Okay, we are asked to compute the corrected departmental profits. Let's see how to track it. So here we have the outline, just as we saw before. You have the particulars, reference, and 3 department columns. Yes, X, Y, Z. Okay, do it, students. Draw the outlines. Make it fast. Draw the outlines. Yes. Keep going. Draw the outlines. Once you're done with the outlines, we shall proceed with the rest. Make it fast. Once you're done, give me a thumbs up. Okay, make it fast. Okay, and in your answer, you don't have to write it as answer outline. No, that is not the way to write. Give it as answer. Okay, that is the answer. When I present it, I'll have to write it as answer outline. But then, because I'm just giving the structure of it, I'm not putting in figures into this, right? So, but when this is actually the outline of your answer. So, in your notebook, you will be writing it as final answer. That would be more than enough. Everyone, use a scale, pencil, draw this, and give me the answers. I mean, just give me a thumbs up once you're done with this. Yes, make it fast. Okay, Thomas, Anandu, all done? All others? Yes. Okay, fine. Good enough. Let's see. And we have the first working note, which is our basic data, as always. So department X to department Y, and department X to department Z, department Y to X and department Y to Z. We have that. Okay. All right. And then in the next slide, we'll have department is it transferring goods to department X and Y. Okay, so just keep this done. Complete. I guess you can do all the 3. It is very simple. You just have to pull out the figures from the question. Complete the first, second, and third working notes, as in inside the basic data. Okay. Department X to Y is it, Y to X is it, Z to X and Y. Complete that soon. Yes. Make it fast, students. Once you're done with the working note 1 basic data, give me a thumbs up. Yes. Make it fast. You are in track. Once you're done, give me a message. You're doing a good job, guys. Postline session, yes. Come up with answers. Okay, Shruti, good. Others, yes, yes, yes. Speed up, speed up. You can straight away pull out the figures from the question. You don't actually need the screens here. Okay. Make it fast because this is similar to the question that we did before. So you can very well pull out the questions, I mean the figures from the question. Make it fast, yes. Yes. Okay. Where are others? Keep responding. Have everyone started working, doing the answers as well? Keep writing this and give me a message so that I can go on with the next slides. Is it taking so long to complete? Okay, fine. Yes, yes, yes. Good. Ria, yes, Devika. Okay. Yes, George, Thomas, Bagan. Everybody able to follow this? Sabrav, yes, Preena. Okay, I guess everyone has completed. Okay, so next, the manager's profit percentage is also required to be written. Departmental managers, they are entitled to 10% commission. Okay, so after that, listen, we have the draft answer. You very well know which is the figure, which is unknown. We just have to compute the unrealized profit and all other figures are given straight. Okay, so listen. We have the particulars, reference, and the three department columns. It is not P, it is X, Y, and Z. Okay. Okay, it is X, Y, and Z. Fine. So profit before charging manager's commission, that is given in the question, as 36,000, 27,000, and 18,000. Now you have to add the manager's commission. You just have to do 1 by 9 of that. 4,000, 3,000, and 2,000 you get the manager's commission as, and then you reduce the unrealized profit, which you will have to compute using your next working note, and hence I write it as question mark here. We don't know, we'll have to compute it. Okay, and then you get the profit before manager's commission. All these figures are known. Okay, yes. All right, so and from that you reduce your manager's commission so that you get the corrected profit after manager's commission. Okay, so this is the task. The only figure unknown is the unrealized profit. Once you sort out this, once the unrealized profit portion is done with you, it is just a cakewalk. The rest is just plus minus steps, nothing more. Okay, so to the next step, computation of unrealized profit. Yes, students, now you're going to do this. Okay, you are going to come up with the answers. I'm not working it out. You give me the answers and let's see if that works that way or not. Okay, yes, yes, make it fast. All right, come up with answers, students. Yes. Okay, give me the answer. Use your calculators, come up with answers. How much is the unrealized profit for different departments? What is the unrealized profit for X, Y, and Z? Okay, yes, Harshada, 4,000, 4,500, 2,000. Shruti has also come up with two answers. Let's see. Okay, rather three answers. Sorry, 4,000, 4,500, 2,000. Let's see. Others also come up with the answer. Let's see if this is right or wrong. Give me your own answers. This might be wrong. Okay. Use your calculators. Give me the answer. All right. Yes. Okay, others. Yes, Thomas, Ria, good. Varun also got the same answer. Good. Anandu, yes. Okay. Others. Yes, Joel got the same answer. Preena, yes. Okay, Bagan, good. Devika, where is Devika? Okay, Devika, got the same answer. Yes. Anyone else to complete? George is yet to complete, I guess. Okay, majority has done. Alina, yes, good. Okay, Donna, George, yes. Everybody in loop? Okay, Saurav, good. Okay, yes. All done. I guess everyone has completed. So let's see the answers. First one, it was 4,000. Next, it is 4,500. And Department Q, let's see how much is the answer. It's 2,000. Good going, students. So you have computed the unrealized profit also. It was 4,000, 4,500 and 2,000 for Department X, Y and Z. Good going, yes. All right, so we got the unrealized profit. Now what is the big deal, students? Once you get the unrealized profit, you just have to put in that formula, right? And plus minus stuff. And you get the final corrected profit. Yes, keep going. Yes, compute it. You're going to compute the final answer as well. Come up with answers. Use your calculators and come up with the correct answers. You can definitely do this. Very simple, very easy. 5 questions done very shortly. Okay, come up with the final corrected profits. Just plus minus steps, nothing more. Very easy to crack. Everyone come up with the final answers. You have the profit before commission, you reduce the unrealized profit, you get the profit after, before commission. To that you apply 10%, you get the profit after commission, just this, okay? Very simple, such an easy task it is. Come up with the final answers, everyone. Such a simple chapter as well, right? Okay. Okay, so you are here with the answers. 32,400, 22,950, 16,200. Okay, let's see if those are the answers. Even Shruti, okay, somewhat similar answer. Okay, same answer, Shruti. Ria has got the same answer. Thomas has got the same answer. Okay, Joel, Varun, Devika, everybody has got the same answer. Right. Let's see if that is right or wrong. We have the answers coming up. The profit before commission is given. Now you add back the manager's commission so as to rectify the error made, and then you reduce the unrealized profit so that you get the profit before manager's commission. Here we go, and you reduce manager's commission, and yes, almost the answer, yes. And the final answers are 32,400, 22,950, 16,200. Good going, students. You all have come up with the final answer. Okay, 32,400, 22,950 and 16,200 as the final answer. Okay, So is this concept clear for everyone? This is the final answer for that. Okay, everyone clear on this? Any doubt, students? Any doubt till the portion's covered? If yes, please let me know. Give me a message regarding that. Any doubts to be clarified? If all done, we shall proceed with the next question. All done? Anyone yet to complete? Give me a message regarding that. Is it clear? Any point in anywhere of the topic to be clarified? If yes, I'll ensure it is done. All done, students? Everyone? If you are done, please give me a message regarding that so that we can move on to the next question. Okay, give me a message. Screen not visible. Okay, let's see. Is it visible now? Is it visible now, Harshita? What about others? Is there any issue regarding the screen? Okay, George, good. Is it okay, Harshita, now? Okay, no one can say it. Is the screen clear now, students? Delay in updating. Okay. Is it visible now? Okay. Do one thing. You can take question number 4 in textbook. Okay. Start reading the question 4 in textbook. In the meanwhile, let me just sort out the technical issue. Okay. Start reading question number 4 in your textbook, which will be, and have an idea about that so that you can better give the answers. Okay. Keep reading question 4. And try if you can pull out like the outline of the answer. Okay, just see if you can pull out the outline of the answer. Sales and all, they have given separate figures, like how much is the purchase for department P, department S, department Q. They have given it separately. But what happens is, like for certain other expenses like the rent and things of that kind, they have not given the actual the independent answers. Okay, the department wise figures are not given. So our requirement is like, we'll have to compute some way in which we can explicitly divide. We'll have to apportion this common expenses. Okay, just as we discussed in the first class, if it was rent, we apportion that on the basis of floor space. Just like that, here also you will have to take some reasonable proportions and apportion all the expenses. If it is independently given, that is not an issue. Okay, you can straight away do it, put it inside each and every column. Okay, the departmental for each department you can mark it. But if it is a common expense which is given, you will have to compute, or you will have to find out a reasonable basis on which you can allocate that expense. Okay, that is a requirement. Is that requirement clear? Okay, I'll repeat that again. The task is very simple. You just have to prepare departmental trading account and P&L, trading P&L account. Few expenses are given department wise. So for that, you just have to post the figures given in the respective column. Few other expenses, they are given as a common expenses, and for such common expenses, you will have to compute a reasonable proportion, and you will have to split the expenses in the proportion. That is the only task remaining. So what I want you to do is, like, read out the question, prepare the answer outline. Okay, you can very well prepare the answer outline because it is just a departmental trading account. So you will have the particulars column, reference column, and the if it is 3 departments, you will have 3 departments column as well. Okay, and once you prepare the outline, you try posting in figures to that. Whatever figures are available in the question departmental wise. Okay, whatever figures are available in the question departmental wise, you just have to put it in that. Okay. After which, okay, the common expenses allocation, which I'll be working it out. Okay. So till now, just complete this, have the outline of it, and whatever figures are given departmental wise, okay, only specific to one department, you can post it in the respective places. And the outline is nothing but you have particulars column, you have reference column, and you have 3 department columns. Okay, there are 3 departments in the question. So reference, particulars, and 3 department columns. So a total of 5 columns in debit side and 5 columns in the credit side. That is the only requirement. Okay, so keep on posting the answers to that, those which are independent figures. Okay, and after that we'll see to the rest. We'll see how the common expenses can be allocated. And after that, you can also write down the basic data. After the chapter outline, the answer outline, you can also write the basic data. For basic data, there's nothing much. You just have to write down the company name, okay, and the number of departments. That would be more than sufficient. Okay, keep doing that, students. You can write the chapter answer outline. The figures are working notes, and most of the figures are straight away from the basic data, and few others are like from the working note number 2, which will be computed. All right, so we have the particulars column. We can have add a reference column, 3 columns, department X, Y, Z. 1 total column is also given. Okay, better to write that also. So actually we have one at about 6 columns, I guess. 6 columns in one side. Particulars, reference, 3 departments, and a total column. 6 columns in one side and 6 columns in the other side also. Not 5. You will need 6 columns. Okay. Particulars, reference column, department X, department Y, department Z, and total column. Similarly, you will be doing it in the other side also, credit side also. Okay. Give the chapter outline and then the answer outline. Write the answer outline. Okay, just write the answer outline. And once you're done, give me a message, okay? Once you're done with this, give me a message. Question is very simple, students. Nothing much. Very easy to crack, actually. Okay. Once you're done with the outline, give me a text. Six columns in debit side and 6 columns in the credit side. It's projected on the screen as well. keep messaging, students. I hope the audio is clear. Just that you're not getting the screen. We'll sort that out. I hope the audio is clear, and keep messaging once you're done with the task, the answer outline. Is it fine? Okay, Shruti, yes. Okay, Preena, good. Have you all done with this outline, answer outline? Is that done? Is the answer outline portion done? Is that clear? Okay, there we go, good. Okay, Thomas, good. The outline portion is done. Okay, Sabrav. Okay, George, Preena. Good going, students. Is the screen clear enough? Are you able to see the screen now? Oh, you're able to see the screen now, right? I mean, not the TV screen. Is the PPT version clear? Is that? Are you able to see that? Is the PowerPoint okay? Fine. Okay, fine, good. Okay, so everyone has completed the answer outline. Is the answer outline done? If the answer outline, see, we are asked to prepare the trading P&L account as well as the consolidated profit and loss account is also asked. Okay, so okay, no. You are asked to prepare only the departmental trading account. Fine. So do one thing, students. It is a lengthy answer, so you can leave it about 1.5 pages. Okay, nothing much. You just have to fill in these figures. That's the only task pending. But do one thing. Even if that is the case, you can, anyways, at least leave 1 page for that. Okay, you just have to prepare the departmental trading P&L account. Okay. Okay, so the departmental trading P&L account is done. The outline, I guess you all have done that. Now take down the basic data. Name of the company is Mastani Private Limited, and we have 3 departments here. So write down the basic data also. Keep writing the basic data. Okay, Preena, done? Yes, good. Okay, everyone. Okay. I guess I can move to the next working note. See, here I have written the draft answer. Let's see which all figures are given in the question. See, the stock, opening stock is straight away given in the question. Not an issue. Okay, opening stock is given. For all the 3 departments, you have the opening stock given. Okay. And then sales is also given to you. Just keep writing these answers. Okay, here we go. All right. See, opening stock is given, sales is given, purchases is given, closing stock is given. closing stock is given, even the carriage inwards is given, and the gross profit is also given. So if you check for the departmental trading, the carriage inward, you will have to compute the see, listen. I'll do one thing. From the draft answer, I'm just allocating the basic expenses, which are the common expenses. Okay. So let's see to that. How do we allocate the common expenses? Listen, we have carriage inwards. Carriage inwards is related to purchases. See, this is the working note number 2. So unless and until we have this other part, okay, only if we have this one, we'll be able to pull in the figures to the trading account. So carriage inwards, you will be allocating it on the basis of purchases. All right, carriage inwards, you will be allocating it on the basis of purchases, and the purchase figures are given to you straight. Okay, the purchase figures are given to you in straight. For department P, it is 1,32,000. For Q, it is 88,000, and for S, it is 44,000. So you get the ratio as 3:2:1. This is the second working note wherein we are allocating the common expenses. Okay, the second working note wherein we are allocating the common expenses, because once this part is done, it becomes very easy just to divide the common expenses. So carriage inwards, you are allocating on the purchases, on the basis of purchases. Purchases are given because see, carriage inwards, when do we incur carriage inwards? It is incurred when we are purchasing goods, right? And henceforth, we are allocating carriage inwards on the basis of purchases. Carriage outwards, when do we incur carriage outwards? When we are selling the goods. And henceforth, we allocate carriage outwards on the turnover basis. Okay, so it is 1,80,000, 1,35,000, and 90,000. So carriage inwards, you're allocating on the basis of purchases because carriage inwards is incurred at the time of purchase, and carriage outwards you are allocating on the basis of turnover because that is incurred at the time of sales. Okay. Now salary, obviously, how do we allocate salary? It is definitely on the basis of number of employees. So how many employees do we have in each department? Okay, and on that basis you do the allocation. So it is 25:20:15. You just have to check the question. It is straight away given in the question as the ratio. Okay. So that is how we allocate the salaries. Now advertisement. How do we allocate advertisement? See, advertisement is mostly related to the turnover part, because if you want to increase the turnover, you'll have to keep on giving more advertisements. Okay. So advertisement you allocate on the basis of turnover because that is directly related. It is nothing but a selling expense. That is why we allocate the advertisement expense on the basis of turnover. And discount allowed, you have to again allocate on the basis of turnover. Reason being, discount, you give discount when you are actually making the sales, right? It is to your debtors that you give the discount. So to discount allowed, you are actually allocating it on the basis of turnover. Discount received, you will be allocating it at the time of purchases because you receive discount when you are purchasing. Okay, when you purchase, you receive discount, and hence for discount received, you will be allocating it on the basis of purchases. All right, and rent rates will be definitely on the basis of floor space, how much area each department is occupying, and it is based on that you will be allocating rent and rates. And the depreciation on furniture, obviously on the basis of value of furniture. Okay, the depreciation you will be allocating it on the basis of value of furniture, which is 20,000, 20,000, 10,000 straight away given in the question. Welfare expenses, labor welfare expenses, again based on the number of employees you allocate. Electricity expenses, you allocate it on the basis of units consumed. How much electricity is consumed by each department, you do the allocation. Provision for bad and doubtful debts, you do it on the basis of debtors balance. Okay, so everyone, this is just the allocation table. Take this up. Okay, I want it exactly in this format, and after which you will be doing it. Once we get the ratio as 3:2:1, 4:3:2, what you have to do, you just have to take the total expense and do the allocation. Okay, make it fast, students. Do the allocation. I hope the screen is clear for everyone, right? Keep writing this, and once you're done with this, give me a message. Okay, so here we have carriage inwards on the basis of purchases, carriage outwards on the basis of turnover, salaries on the basis of employees, advertisement because it is related to turnover and hence we allocate on the basis of turnover, discount allowed because discount we are giving it to debtors and debtors are related to sales and discount allowed on the basis of turnover, discount received on the basis of purchases because discount received you give it to your creditors and hence discount received is on the basis of purchases, rent rates and taxes on the basis of floor space, depreciation on the basis of value of furniture, labor welfare on the basis of employees, electricity expenses on the basis of units consumed, and provision for debtors, bad debts on the basis of debtors balance. Okay, so these are the ratios in which we compute the allocation. And once you're done, give me a message for that. Keep on writing this. Nothing to worry. Though a big table, it is just a allocation purpose. Okay. All right. Keep doing, everyone. All done. Once you're done, give me a message. Okay, Shruti, good. All done, everyone. We are just allocating the common expenses. We have taken a suitable basis of allocation and we have found out the ratio in which we can allocate the expenses. Okay, so keep doing it. Okay, Harshita, Preena, Anandu, good. Okay, others. Okay, good. All right, Joel, done, good. Okay, Bhagan, good. Or what are those? Everyone, keep messaging. Okay, Devika, good. Good going. Okay, yes. Proceed. Okay. Yes, Donna, good. Yeah, we have just computed the ratios. Okay, we have just computed the ratios as to how it should be apportioned, how the common expenses are to be apportioned. If it is nowhere in this list, it means those figures are independently given. So, for example, sales is separately given for the 3 departments, purchases are separately given for 3 departments, and similarly, the such expenses are independently given, but only for these expenses that it is given, the total expenses is given as a whole. Okay, so you will have to use the suitable allocation basis for that. Okay, keep going. Yes, I guess everyone is almost done. All right. Okay, so let's move on to the next. We have the final answer coming up. The columns are there. All right. See, the opening stock, it is straight away given as 36,000, 24,000, 20,000, and we have also written the 80,000 total. Sales is also given as 1,80,000, 1,35,000, 90,000, and we write the total. Okay. And now we have purchases also in picture. We have purchases given as 1,32,000, 88,000, 44,000. We have the total purchases. Stock is given as 45,000, 17,500, 21,000. Okay. Next, carriage inwards. See, for this you will have to use the ratio we computed before, because it was only the total carriage inwards was given. Okay, only the total carriage inwards of 3,000 was given to you, and for this 3,000 you will have to use the ratio which we computed in working note number 2. So in the reference column, as I said, I have missed out the reference column, but you need to have the reference column. In the reference column, you will be writing it as working note number 2. Okay. So this 3,000 amount you will be apportioning on the basis of the ratio which we computed in the previous working note. Now, gross profit. See, once you have all these figures, you just have to balance this figure. So gross profit is nothing but a balancing figure. All right. So with this, we are done with the trading portion. Okay. Everyone complete the trading account. You just have to write the carriage inwards apportionment. All of the figures are straight away taken from the question. Okay. Just complete this. Complete the departmental trading account. After this, we will be proceeding with the profit and loss account. Okay. Keep writing the students. In the meantime, we are also working on the video. And words, all the figures are straight away given in the question. You just have to take up the figures. And carriage and words, you have already computed the ratio before. So on that ratio, you will be allocating the expenses. Okay, carriage and words. And after you get that, you just have to take a balance of it. You just have to compute the balancing figure, which will be your gross profit, and then take a total of it. After which we'll be proceeding with the P&L portion also. Okay. So once you're done with this, give me a message, give me a text. Okay, Shruti, good. I'm waiting for others. Let everyone complete. Good that everybody is actively participating. I'm glad to receive your inputs, your messages, your answers. Okay, Ria, Thomas, George, everyone is doing perfectly good. Okay. Yes, Preena. Okay, Varun, good. Halina. Yes, Joel, good. Good going. Saurav, good. All right. Okay, so everybody has messaged, I guess. Anyone missed out? All right. Okay. Yeah, GP figures are given here. It is 55,500, 39,500 and 46,500. It is just the balancing figures. Okay, GP is nothing but the balancing figures. Once you get all of the figures, once you have opening the stock, purchases, closing stock, sales, cash inwards, you just have to balance it and you will get the GP amount. Okay, that is it. All right. So once you're done with this, so the GP amounts are 55,500, 39,500, 46,500. All right, cool, good. Now, once we are done with the trading account, next is our profit and loss account. See, listen. For profit and loss account, GP, we took it from the trading account. Okay. Carriage outwards, we earlier we just apportioned that. Carriage outwards, we apportioned it on the basis of, how did we apportion carriage outwards? It was apportioned on the basis of turnover. Okay. So on that basis, because only the total figure was given. And this total figure you apportion on the basis of turnover. All right. So here we have the carriage outwards. And then we have the next one, which is discount received. Discount received is from the creditors, and hence we apportion this on the basis of purchases. We have the ratio there. You just have to use the calculators, and the total figure you just have to apportion it. Okay. Electricity was on the basis of units consumed. You have the total expense. You just have to allocate it. All right. All these are very simple. That is what. And salary, again, it is allocated on the basis of number of employees. You have the total salary expenses, and this you will be allocating on the basis of number of employees. You have already computed the ratio before. Next, advertisement, it was on the basis of turnover again. So again, the total expense, you will be allocating it to all the three. And then you have discount allowed. Discount allowed is to debtors, and hence we apportion that on the basis of the turnover. Okay, so 2,250, we have the ratio before. So it is just an allocation task, which you will be able to do. Rent, rates, and taxes on the basis of floor space. We have allocated that amount as well. Depreciation on the basis of value of furniture, and provision for bad debts, it was on the basis of debtors, or straight away you can compute it on debtors amount as 5%. Okay, so and labor welfare expenses on the basis of number of employees. So once you're done with all these allocation, you get the net profit. All right, so students, make it fast, compute the net profit yourself, give me the answer of net profits. Okay, yes, make it fast. The profit and loss account part, departmental account is already done. Departmental trading account is already done. Now you're doing the profit and loss account. Here, no figures are given straight away. Okay, for all the figures, you will have to use the ratio and you will have to work it out. Clear on that? So students, calculator, scale, pencil, everything in your track, and then use it and compute the net profit. Yes, come up with the final net profit answers, everybody. Keep on doing. Yeah, very close to the answer. Just maybe 2 or 3 minutes to get the final answer. Okay, make it fast. The total expenses, you just have to allocate the total expenses based on the ratio which we have already discussed before. Okay, in the working note 2, we have done the ratios. So on that basis, you will be allocating the expenses. Only that task is remaining. Only your calculator task is remaining. All other figures are given to you. You just have to use your calculators, come up with the figures, write it down. That's it. That is the only task pending. Okay. Yes, and everyone, give me the answer. You give me the answer for net profit. Yes, you can do it. Once you're done, give me a message regarding that. Post your answers. Post your answers as well. Okay, Harshita is coming up with some answer. Yes, let's see. All others, take your time, not an issue. Take your time, come up with the answer. Okay, we'll see if it is right or wrong. Once you have all these figures, it is very easy to crack it, right? 26,350, 16,350, 46,800. Yes, Shruti, let's see. Let's wait and see for the answers. Okay, why it is 16,350, Harshita? Good. Let's see. Good that you're coming up with some answers at least. I'm glad about that. Okay, you have changed your answer, Shruti. Or is it, okay, slight change for department. Is it fine? 29,300. Good. Let's see. Let's see for the answers. In the meantime, every others, keep on working it up. I want answer from everyone. Now that I have received a message only from 2. I'm waiting for others as well to respond. You're all doing good. Any doubts anywhere? Please do feel free to ask. Not to worry on that. Okay, Thomas, Priya, good. Let's see. Let's wait and see for the answers. Okay, Prina. We'll see if the answers are right. Okay, Bagan. Everybody, come up with your own answers. Everyone. Okay, I want answer from everyone. Yes, George. Anyone missed out? Let me see. Joel is yet to come with answer. Madhura, Ria, I doubt. Ria has already given me the answer. Yes. Sandra, Savrav, Thomas has already posted, I guess. Yes. Okay, Joel. Okay. All right. Joel has come up with the answer. Devika, Anandu. Okay, and I'm waiting for others. Okay. All right. I guess almost everybody has given me the answers. Okay. So now let's see if your answers are right or wrong. Let's see the net profit. It is 26,350, 16,350, and 29,300. Yes. Good going. You all have done the correct answers. You all have received the correct answers. So this is the final answer for that. Okay. So it was just a very simple question actually. You just had to compute the common expenses given. You just had to allocate those expenses based on a reasonable apportionment. Okay. So we have done with that also. That part is also done. And so, all right. Okay. You're all doing really good, guys. Good to know that. Okay. So, shall we move on to the next question? What say? Shall we move on to the next question? We have question number 7 coming up. All right. Okay. Let's see to the question number 7. Is everybody done with this? Everyone completed? Just give me a message, drop in a message, everyone, like everyone done, and if everything is clear for everyone. Any doubts to be sorted out here and there, let me know. Joel, Anandu, yes, good. All done, everyone? Thomas, yes. Bagan, George. Okay. All right. Okay, fine. Everybody has almost done. Now I guess we can move to the next question, which is question 7. What private limited? Okay, let's see how to sort this out. This is your, I guess it is illustration 7 in your question. Just to have a check, illustration 7 or illustration 6. Okay, let's see to that. Okay, so let's see. So what private limited has 2 departments, Department A and Department B. Following are the particulars: prepare consolidated trading account, department and departmental trading account. Okay, for the year ending 31st December 2001. So we are actually asked to prepare 2 data. We just have to prepare the trading account. Okay, only the trading account is required. But the trading account, you will have to prepare it departmental wise. That is one requirement. And the other one is that you will have to prepare a consolidated trading account. Okay, you have to prepare a departmental trading account, and then you are also asked to prepare the consolidated trading account. What do you mean by consolidated trading account? You just have to club both departments together. You have Department A, you have Department B. You just have to take club both together and see what is the total picture of the company as a whole. Okay, let's say if this War Private Limited has 2 departments, A and B. We are asked to prepare A and B separate trading account, and also what will be the trading account when we are dealing War Private Limited as a whole. Okay, so these are the requirements. These are the questions up front. Let's see what best can be done. Listen, opening stock is given 20,000, 12,000. Purchases is given in the question 92,000, 68,000. Sales 1,40,000 and 1,12,000. By the way, did you all get the required question number? Just give me a message. Did you all get the required question number and the page number in the textbook? If not, let me know. Everybody done? Yes. Okay, Harshita, good. All right, fine. So let's proceed. Okay. So Listen, sales is given to us, wages is given to us as 12,000 and 8,000, carriage inwards is given as 2,000, and we have the closing stock of both. See, opening is given, purchases is given, sales is given, wages is given, carriage is given. Closing stock is also given as 4,500, 6,000. Finished goods is also given. Okay, like as in for closing stock, we have two types. Some goods we might have purchased, and some goods the entire process might be complete. So in the closing stock, we have both in picture. We have purchased goods also, balance of purchased goods also, and balance of finished goods also. Okay, and hence we have two classification. Purchase goods, because right in our foundation we have learned you can classify stock, right? You can classify it as raw materials, work in progress, and finished goods. Just like that, here also we can classify the total closing stock as the balance stock. The purchase goods are there and also the finished goods are there. And then they have said purchase goods transferred by B to A. Listen, from B, they have transferred certain goods. Okay, from B to A, they have transferred goods, thereby meaning this 10,000 will be a purchase in A. Okay, because A has received the goods, right? So this will be a purchase in A, and this 8,000 will be, this will be purchase in A and sale in B. And 8,000 just the reverse, because B has received 8,000, meaning purchase in B and sale for A. Okay, you just have to concentrate on this portion. To whom? Purchase goods received to A, meaning this will be A's goods. Okay, A's purchase. And here it will be B's purchase. If it is A's purchase, obviously it has to be the other person's sale. All right. Finished goods A to B transferred by A to B. So it is B's purchase. This 35,000 is B's purchase and 40,000 is A's purchase. And the ulta happens. Okay. And return of finished goods by A to B, it is 10,000, which means okay, A to B it is 10,000 and B to A is 7,000. A to B return means B has received those goods, so A has returned those goods. Okay, let's see how we'll crack all these. And B to A is also given. Fine. And the balance of it, you are informed that purchase goods have been transferred mutually at their respective departmental purchase cost and finished goods at departmental market price, and that 20% of the finished goods, okay, 20% of the finished stock, which is the closing, at each department represents finished goods received from the other department. Thereby meaning, listen, let's take department A and department B. In case of department A, there 20% of FG. We are not concerned about the purchase goods. Okay, we are not bothered about that because it clearly states only about the finished stock. So 20% of the finished goods will be from B. Okay, the balance 80% is fine, not an issue. Similarly, for department B, the 20% of finished goods are received from department A. Clear on that? It is only this. So in because here we have the concept of unrealized stock reserve in picture. Okay, so for department A, 20% of their finished goods is received from department B, and for department B, 20% of their finished goods is received from department A. Why? Because listen, it is clearly stated in the question that purchase goods, we are not bothered about purchase goods because purchase goods are transferred at their cost only. See, if purchase goods are transferred at cost, thereby meaning there is no profit element added. So there is no unrealized profit in this. In this purchase goods, the unrealized profit or stock reserve concept is not applicable. Okay, the stock reserve concept is not applicable for purchase goods because the purchase goods are transferred at cost. It clearly states it is transferred at the purchase cost. So there is no profit element involved or stock reserve involved in the purchase goods. Whereas the finished goods, they are transferred at the departmental market price, thereby meaning there is a profit element included in that. Okay, so I repeat, purchased goods, okay, purchased goods stock reserve concept is not applicable because they are transferred at cost, whereas the finished goods, we have the concept of stock reserve Okay, we have the concept of stock reserve because they are transferred at the market price. All right, so here this is a purchase goods are transferred at cost, so we don't have the concept of stock reserve. Finished goods transferred at market price, hence we have the concept of stock reserve. All right, so and how much is it for department A? It is 20% of finished good, which is represented from or which is given from transferred from department B, and for B it is 20% from A. All right, okay. So is the question clear for everyone? Is the question part clear for everyone? If yes, give me a message regarding that. Is any further briefing required for the question? Okay, everyone clear with that. So we'll do one thing. We are running short of time. Anyways, we'll just take down the answer outline. Okay, we'll just take down the answer outline and also the basic data. Both that can be done. All right, the answer outline. See, what are we asked to prepare? We are asked to prepare the departmental trading account, right? So particulars reference the two departments we have. We'll be writing that. Similarly, in the credit side. Okay. Departmental trading account, particulars, reference, department A, department B, similar items to be written in the credit side as well. All right, so just have this in mind and just take your scale, pencil and just draw the outlines. Just have the outlines done and then we'll sort it out. Just have the outlines in picture. Take the scale, pencil and just draw the outlines. You are really doing good. Through the outlines. Okay. Once you're done with the outlines, okay, it's just a matter of 8 columns as such. Right. Okay, just a matter of 8 columns. Make it fast. 8 columns. Once you're done with the outline, give me a thumbs up. Okay, once you're done with that, give me a thumbs up. Make it fast, students. All right, Devika, Harshita. Okay, okay, Shruti, Anandu, Preena, Riya. All doing good. Bagan, Joel. Okay. Varun. Okay. I guess everyone has actually done the outline of it. Now let's just take the working notes as well, the basic data. Okay. Sorry, we are actually asked to prepare 2, right? One is a departmental trading account, independent one, and we also have to prepare the consolidated one. As in, how will it be if we are taking War Private Limited as a whole? Okay, if it is only War Private Limited in picture, we are not concerned about Department A and Department B. We are only concerned about War Private Limited. How will be the trading account? So here you don't actually need two amount column. You just need one amount column. Okay, particulars amount, more than enough. All right, and just take the outline of this also because both these are required. Okay, so you have 2 outlines. I mean 2 tables to be drawn. One is the departmental trading account and the other one is the consolidated trading account. The departmental trading account, you will have the 2 amount columns. Here we have only 1 amount column required because we are dealing like how it will be when we are taking it as one single company. Okay. Once you're done with this, we'll move on to working note 1, which is our basic data. The basic data, working note 1, basic data. Okay, make it fast. All done? Okay. So now let's see to the basic data for this. We'll just keep on writing this also. Okay. The name of the company is War Private Limited, and we have 2 departments in picture. Purchase goods, as I said before, purchase goods, they are transferred at cost, and finished goods, they are transferred at market price. Hence, we have the concept of stock reserve. Okay, and of each department, 20% of finished goods is actually from the other department. Okay, so these are the 3 working notes to be done. Okay, only 3 working notes. This was clearly defined, explained before. If any clarity is required, I shall explain. Purchase goods transferred at cost, and hence stock reserve concept is not applicable. Finished goods transferred at market price, and hence we have the concept of stock reserve in picture. Okay, and the 20%, because all these are not given in a table format. So we just pull it out and write it as basic data. 20% of finished goods at each department will represent the finished goods from other department. Okay, so complete this also, and the balance of it we'll be taking up in the next class. Okay, keep writing this, and once you're done with this, give me a message. Okay, we just have 2-3 points here. Once you're done, drop in a message. All done? That's the basic data. Keep revising, students. Keep revising. Be prepared for the next class, because we are getting into a bit more higher level of this chapter. Okay, so come prepared for the next class. Yes, Amrav. Yes, Joel. Good. Okay, Ria. Good. Thomas, Anandu, Varun. Okay, Prerna. Okay, Devika. Okay, Bhagan. I guess everybody has come up with the answers. Good going, students, anyways. So we'll close with that for today's session. Okay. So the next. Okay. So we'll do one thing. We'll just quickly revise through what we have learned today and what we have learned in the previous class also. Okay. Listen. First, we had the listen. We'll just quickly revise through what we have learned. The first one was like a ditto one of the previous question, like the previous question which we did it in the previous earlier class, wherein we were asked to prepare the departmental trading account. And for the departmental trading account, actually, we were given all the data. We only had to compute the profit percentage. Okay, we had to compute the profit percentage. And once the profit percentage was done, from the sale value, you can actually reduce the profit percentage amount so that you get the cost. And you were also asked to prepare the opening stock. Okay, which was also easy to do, because we have the formula of opening plus purchases minus closing is equal to minus closing is equal to sales. So you just have to rearrange the formula so as to get the opening stock. Only those were the elements missing. Okay, so in that manner we computed the closing stock units and the value of closing stock and the opening stock. Okay, and that was the only requirement in question 2. And then the next question what we did was like we had to compute what was the manager's commission. We had to rework on that, and what exactly was the actual profit, okay, of the corrected profit of the department. And here we had to apply a bit. Okay, we had the basic data for that, and then okay, we were asked, we only had to compute the unrealized profit amount. Okay, that was the only part missing, the unrealized profit. And for the unrealized profit, what we did was we took each department from, if it was department P, the it will be having unrealized profit of the stock lying in department S and Q. Okay. The unrealized stock was the only unknown figure, which we computed in the next slide. Okay, so here we go for the computation of unrealized profit. We learned how to compute 1 by 9. Why is it 1 by 9? All that was learned, and then see how we computed for department P the unrealized profit. It will be regarding the stock lying in department S and department Q. Okay, so this was the manner in which we computed the unrealized profit for department P, S, and Q. Okay, that was the only task. And the next question was also in the same pattern. There was nothing new in that. We just had to compute the unrealized profit. And after which, the Mastani Private Limited, it was regarding a question wherein we had to apportion the common expenses. Okay, here we had to apportion the common expenses. And how we apportion the common expenses, only this table is actually required. How we allocated carriage inwards, it was on the basis of purchases, carriage outwards on the basis of turnover, salaries on the basis of employees, advertisement on the basis of turnover, discount allowed on the basis of turnover, discount received on the basis of purchases, rent rates on the basis of floor space, the space that we occupy, depreciation on the basis of value of furniture, labor welfare on the basis of employees, electricity expenses on the basis of consumed energy consumed, provision for bad debts on the basis of debtors balance. Once we get that, it is very easy to allocate the common expenses as well. Okay, and then we started doing the working note number, the question 7 of Ward Private Limited, wherein we were actually writing the, we just wrote the basic data of that. Okay, wherein we learned that what all did we do? The department A and department B, for each department, the finished stock of 20% of it was from the transfer of the other department. And then what else? The purchase goods was transferred at cost, and the finished goods was transferred at departmental market price. And hence, for only in the case of finished goods, we'll be having the consideration